Hello and welcome to the Trading Bell. Now, pre-pandemic, it was projected that insurance penetration in Africa would average 7% between 2020 and 2025, but we know what happened during the pandemic, and that figure still stands at 3% as we speak. Well, today we'll be having a conversation on matters insurance, and I'll have Dr. Kipng'etich, Julius. Thank you very much for coming to the show.
Yes.
I know Africa in the insurance sector, is it very bullish or should we be concerned in brief?
It's bullish.
Bullish it is.
The future is bright.
Definitely.
Yes.
Well, this is the conversation that we'll be having right here on Trading Bell. I'm no Kipng'etich, and this is Dr. Julius Kipng'etich. Once again, welcome to the show, Dr. Kipng'etich.
Thank you. No.
I mean, insurance in Africa, for the longest time, historically, we've created a system. You know, we believe in fate, we are favored by the gods for the longest time. And this idea of insurance comes in and says you can protect yourself by paying for future, liabilities. Mm-hmm. And that idea has not yet sunk very deeply in the African society. Briefly, why is that?
Insurance as we know it today, and the way we manage risk is slightly different in Africa. It doesn't mean that because people have not bought insurance, they are not managing risk. They do, but in a slightly different way. I'll use Kenya as a very good example. The fact that we have insurance penetration of 2.3% of GDP currently doesn't mean that the rest of the economy is not largely covered or they don't manage risk. Let me give you the example of Arambe. Arambe is one of the best risk management tools. If, for example, somebody is sick in the family, what do? We rally around the person, we form a WhatsApp group, we contribute. Myself, I contribute probably to one group once a week. Mm-hmm. People even don't know, but the social pressure to contribute something, 500 shillings, 1,000 shillings, and then we solve the problem. Or people meet in a restaurant all over town or anywhere in the country, and they rally around a cause. That is managing risk. We have learned to manage risk in a slightly different way. Or the other alternative is people go to church and pray, and the pastor comes and blesses you. You feel relieved, or the church itself can organize a Arambe and rally around a parishioner who is in distress. That's managing risk.
Okay.
So risk is managed in the economy in ways that insurance companies need to learn.
Okay.
So I wanted to look at how banking used to do money transfer and the place of M-Pesa. It doesn't mean that we never used to do money transfer. We used to do it. But the banks never understood the volume and the need for money bank transfer. So somebody else in another industry looked at banking and said, you guys, there's a need for money transfer. I can leverage the technology which has come, a mobile phone with an SMS, okay, make it secure and use it as a platform.
Yes.
And voila, a whole new thing was born in Kenya for the world.
Yes.
So insurance, in my view, is at that point.
I see that.
And the M-Pesa point,
yes,
for insurance is there. It's about to blow.
I know.
Yes.
And you're very passionate about the revolution that you were saying, technological revolution in insurance. But I'd like us, for starters also, to touch on the performance, and whether what is happening externally in our environment is making us rethink insurance. So pre-COVID life was going on very well.
Yes.
All of a sudden there's a global pandemic. And people are wondering, okay, people are getting sick. How do I fund medication? For the longest time in majority of Kenyan families, medical, budget, for example, it takes a huge toll on the family budget at large.
Yes.
Majority of people have been run into poverty for that. So the pandemic, was it a turning point on people rethinking, especially, for example, medical insurance?
I agree with you now. You see, pre-COVID, we had never had a pandemic of a global scale for 100 years. So people had grown complacent. People had assumed that I think we have reached the point where we can tame any disease. And bang, 2020, this disease arrives, shuts the whole world, puts many people at risk. And people now think, oh, now if you look at literature, medical literature now on pandemics, they are saying a pandemic is likely to be around us every 5 to 10 years. Now, if the frequency is higher, it means people then must ask themselves, how do we manage the risk that is emerging? For us as insurance company, as Jubilee, for example, we have now enough data for our actuaries to do the risk analysis of it and try to estimate the kind of pricing for that risk. So we were among the first insurance companies in Kenya to offer cover for COVID because we had enough data to calculate the risk and price it.
Okay.
And so, in my view, the world is waking up to that reality that we are going to be having more pandemics, and largely because of climate change, and also the nature of our lifestyles, and the world generally has changed so much that having frequent risks of global scale, we must prepare ourselves. And I urge many Kenyans, take medical insurance. Even in old age, the greatest challenge for older people is medical insurance. Please take medical insurance. It is not as expensive, and you don't want to be a burden. Don't be that person where people meet at a restaurant to do a rambe for, yet you could afford to pay the premium for medical insurance. But once, because insurance, remember, it's very similar to rambe, it's pooling, you're pooling, okay? It's just that you're pooling with people you don't know. The insurance company knows. So we are a good intermediary for you. Come to us. Let's manage your risk. And so therefore, you go through life in comfort. That is why in Jubilee, our motto is live free. Free yourself of that worry.
Okay.
And Jubilee will take care of you.
Definitely. And in the spirit of living free, I'm looking at the performance for Q1 2022 by IRA. The underwriting performance of the general insurance business was at a loss of 510.2 million shillings, which was an improvement actually from the previous year from 1.74 billion shillings. And I know with your strategic partner Alliance, your general side of business, you let that, you succeeded that. Talk to me, this loss on general side, because I know life is under, medical is under general. How does the industry survive with such kind of losses?
I think that loss of the general insurance comes from motor. Generally, for all insurers, half their business comes from motor. Now, if I ask many Kenyans a little older, probably my age, 10 years ago, you used to pay around 10%, okay, of the sum assured as premium. Today, you're averaging 3.5 for the same car for higher risks. That is where the problem is, okay? Because of pressure, competitive pressure, price has come down, okay, to a level which is unsustainable. In fact, even the regulator has been writing to us and says, guys, the way you are going, things are wrong. So that industry loss is contributed largely by motor, and we need to fix it. In my view, motor needs to be priced at 5% at a minimum. Okay, for then us to cover that risk, because the minute you run a loss as an industry, who gets punished? It's the shareholders. You're eating into your capital. So we need to sit down together with IRA and ACI and agree that this is the minimum price and everybody must comply.
All right.
Those losses are unsustainable and it puts our GIs at risk.
First of all, implementation of the risk-based supervision.
Yes.
Yeah. And this one actually sort of to boost confidence. Briefly talk us through this risk-based supervision and what impact it's expected or it should have in the industry.
So what the regulator is trying to do is to match your capital to the risks that you are taking. Yeah. So there's a way of calculating the capital adequacy ratio as a result of the risks that you cover. So therefore, capital requirements vary from the risk, which is the correct thing. Okay. So my 6 cents, 2 cents of it is, it's the correct thing to do. If you look at even for banking, for example, they have gone to risk-based capital requirements. So your risk appetite should always determine the capital that you need in your company. Okay. Capital requirements for insurance companies are pretty high. So this will enable insurance companies not to take risks, and if you take much higher risks, then you are doing a higher capital call from the shareholders. So it's the correct thing to do. And
how is that expected to sort of reform the sector? Will we see now more people rethinking, more companies consolidating? Might this push to consolidation?
So this will trigger consolidation, because when people assess the risks and your capital adequacy is say, right now it's 100%, you're required to have 100%. If, for example, you take a higher risk, and when we recalculate your capital adequacy, it is below 100, it means you put in capital. And even the regulator is saying in another 2 or 3 years, it requires 200%.
Yes.
So 200% may mean, for example, a capital recall of 2-3 billion. If you don't have that 2-3 billion on the capital recall, so that then it covers the risks that you are taking, then what do? You have to consolidate or close shop. So there will be a natural consolidation happening as a result of this. If you cannot raise the capital, then the regulator will say, sorry, goodbye. You're in the wrong industry.
Oh, but it's the pains of reforming a sector.
Yeah.
And I mean, I'm looking again, because you've touched on medical and talking about scale, and with general, especially motor, being able, the premiums being contributed should be key. But again, the concentration of where the premiums are coming from, should that be a concern, especially in our market, where we are seeing over 75% being concentrated around Nairobi?
Again, Noah, let's look at the banks. The banks are our cousins.
Yes.
And they are far ahead of us. So there are a lot of lessons to be learned from them. If you look at the banks, they have been able to harness business outside Nairobi, okay, by having a larger branch network. Okay, Equity and KCB, for example, have over 200 branches. Okay, you might say, okay, 40% are in Nairobi. Well and good, because a lot of the business is in Nairobi. But they have made an attempt. What we need to do as insurance companies is to have a similar retail network that then reaches out to as many people as possible. We as Jubilee, for example, we started off largely as a corporate. corporate insurer. We now are taking a deliberate move to coming down. Okay, if you look at, say, for example, our medical portfolio, and it's in public domain, it's there in the IRA website. Corporate business is around, for last year, it's around 8 billion. And then retail was 1 billion. Now, we are changing the mix gradually. This year, we are aiming at 2.3 for retail and 9 billion for corporate. So if you look at the growth of retail, it's much faster.
Yes.
What are we doing? We are coming lower to SME.
And that speaks of the mergers that we are seeing. Yeah, yes. You can't go solo. Yeah, but again, this brings me to that issue of NHIF,
yeah,
because it's supposed to be a social protection net.
Yeah.
We are trying to reform, especially it's catered to people who are in formal employment, yeah, for the longest time, and people will think, okay, the private sector will take advantage of the informal sector and try to reach those areas. I know we've touched a little bit on that, but is there a strategy of going into that informal market, which is hugely untapped, even in the insurance world?
No, the challenge with the informal market is organization. That's a problem. They are not organized. One of the things I advocate for is formation of SACCOs, organized groups. SACCOs, aggregators, there must be some register somewhere, okay? And that register has a certain minimum standard of organization, because you see, the law demands of us on KYCs, you know your customer. So we want an organized register, so then we can go through it and say, I know Noah, okay, and he has these credentials. And so therefore, when the regulator comes and says, do you know your customer? Then I say, yes. Noah is a member of this SACCO, and these are his credentials. And so I know him, okay? Yes. If he's doing money laundering, then I can pin him. So the informal sector needs to form SACCOs, and we need to move faster and make sure that they actually work. Okay. One of the SACCOs that I truly admire and is well functioning in Kenya is KTDA, small scale farmers. The average holder is as half an acre of tea. But KTDA is a global player in the tea. In fact, the highest quality tea comes from KTDA. It's handpicked and it's processed well. So if every sector in Kenya was like KTDA, Kenya would be far.
Our time is running out. Being in an industry for 85 years,
yes,
is quite a long time. Briefly, the next 85, what will shape that? And have you already laid that foundation now? Briefly.
Okay. Jubilee is celebrating 85 years this year. We were founded in 1937. We have come a long way as a general insurer. We later on branched to life insurance. And today, we are an insurer of all types. We are a universal insurer. And we are proud of that heritage. We are a listed company. So if you want to buy shares of Jubilee, go to your broker, and you should be able to buy shares. So we have been successful, and we are the most trusted, we are the largest, we are the most profitable insurer in the industry. And that heritage is going to take us for the next 85 years. The next 85 years will be definitely different from the previous one. Why is it going to be different? One is the impact of technology. Technology is going to influence the world going forward. Two is the nature of the risks. The risks that were insured in the past will slightly change because of what's happening. And I had mentioned earlier on things like climate change, pandemics, more frequent. So the nature of the risks are going to change. The other thing is, if you look at, say, Generation Z as an indicator, the nature of employees will also change. The nature of the customers will also change. So the next 85 will be slightly different. So what have we done? We are now adjusting the company to fit into that future. What are we inbuilding? More agility, more flexibility, a company that can react to changes much faster, okay? But some things will also stay the same. One thing that is enduring in Jubilee is excellent corporate governance. That has been there from day one in 1937 to today, and I can guarantee you that good governance will be there also for the next 85 years.
Okay.
Because one of the things that we are proud of and we host here is the Blue Company Project. I wear its badge here, and it is our way of saying as Jubilee that we are good in corporate governance and we can tell others about it.
Okay.
Because our values are strong, our anti-corruption credentials are strong, and they are not going to change for the next 85 years. So as we prepare the company to be more agile, to be more flexible, to adjust to changes in the world for the next 85 years, there are some things which will stay the same. Our values will always remain the same.
Definitely. And I'm glad you've closed with the most foundational thing, values.
Yes.
You can lose money, you can lose business, but once you lose your value, then you've lost your soul.
Yes.
That's it. Thank you very much.
Thank you very much, Noah.
This was a good conversation. Dr. Julius Kipng'etich, CEO of Jubilee Holdings Limited, is the regional CEO. The ins and outs and the understanding of insurance sector. It's not like we didn't have insurance. It was just a different format in the African continent. And as market players, we need to rethink how to tap into not using the template from the West, from the East, use customized and solutions that are founded within Africa by Africans, even in the insurance sector. Well, thank you very much for engaging in this conversation on Trading Bell. We leave you with the markets.